All right, folks, the kick save in sports like soccer, ice hockey, it really is like the ultimate nail biter moment, right? And of course, afterward, it creates either the most joyful experience for a fan if your team got it in, or maybe anguish if your team didn't get it in or blocked it. And yesterday, well, the stock market, it was all about joy with its kick save. My next guest says, not only did it pull that off, the kick save, but it was also a rare reversal day. So I want to bring in now Strategas, Chief Market Strategist, Chris Verrone. All right, Chris, let's talk about this kick save. Make a little room for the audience to see. So we were nearing that dreaded 200-day moving average.
Well, this is a market that I think is bending but hasn't broken yet. You know, we'll see what the next number of weeks bring. But, you know, what I would really focus on, this is a 200-day up that's still upward sloping. So the longer-term trend here is still constructive. I don't want to lose sight of that here. What we haven't seen yet, and it's a little troubling, we still haven't seen that flush yet, that real internal flush for the market at large. You've seen it with some groups. It's important, you know, without a flush that you kind of regain the uptrend quickly. Above 6,900 would make us feel better. That would kind of erase that pattern of lower highs that has been intact. So it's an important couple days here, but certainly welcome the save at support yesterday.
And again, we're going to pull up another, you know, you had a great report out. We pulled some charts from it. We'll pull up the table here. And I know it's a lot of numbers, folks, so let's just focus down here. Your average 125, 250 days later after these rare kick saves, the market is generally up, and it's up a vast majority of the time.
Yeah, you know, it was unique yesterday in the sense that we opened below Friday's close and we closed above Friday's high. So you kind of had that full reversal, the full engulfing day. It's only happened 26 times since 1982. So rare you get that type of price action. It's a mixed signal in the near term. It's actually a pretty decent signal when you start looking out 6 and 12 months. So we got that message yesterday. It doesn't help you a lot over the next couple of weeks, but generally pretty constructive.
Which is
longer
good.
term.
It's good. You're a long-term investor, you know, not maybe the panic right now. But let's zero in on the you just mentioned a flush, right? And so green highlights positive in your trend models. You know, we haven't had a market flush, but we've had extraordinary volatility beneath the surface, and there have been some individual names and sectors that have been annihilated.
Yeah, you know, what we're looking for here is groups where the new lows surge, really reflecting this indiscriminate selling, where it's kind of sell what you can't ask questions later. And in particular, what we're trying to identify is, you know, groups where you've seen very intense selling but are still in long-term uptrends. Banks check that box. Some of the semis, the autos, materials, cap goods, so where you've seen a flush internally, but the long-term trend is still intact.
So what does that say then? That was the selling was more emotionally driven then, maybe? What does that suggest?
That's one of the features kind of late in a decline that you get, you know, this very high emotion, high intensity selling. You have not seen it for the market at large. You've seen it for a handful of these groups.
All right, let's talk about emerging markets. That's been a trade. Everyone likes international, emerging. This is emerging versus the S&P. 2025, it made its move. It continued 2026. Does it pick back up here? I mean, is it time to count the chips?
We're betting that it ultimately does. So this is EEM versus the S&P. So when the line is going up, the emerging markets are doing better than the S&P. What you've seen the last couple of weeks is basically a retracement back to where it broke out from. So I do think ultimately this will stabilize and ultimately turn up. And you know, what's unique about these events longer term is they tend not to really disturb what was already underway. I think this period of outperformance to the emerging markets has been underway and is likely to come out of this still the winner here.
We could have pulled up like a 10-year chart to really underscore how much potential upside there is. I've got a minute to go. I want to try and hit 2 stocks with you because they were in your report and it caught my eye. Capital One, important spot for consumer finance, a bellwether.
Yeah, I think it's an important spot for financials in general, consumer finance in particular. This is Capital One. You're kind of back on right on the 5-year trend line here, which has caught every decline. So if you're going to subscribe to this idea that actually, hey, the consumer's okay, this has been a modest pullback and a long-term uptrend, it's important stocks like this or Synchrony or Ally or BlackRock respond to these oversold conditions and start to work back higher.
And quick on Circle, I was talking about this about a week and a half ago. It was great news from Stripe, great news from Circle. It's made a monster move with a big gap there. It looks like this is a major breakout here.
Listen, I think it's an important change in the character of the chart, which has been mirrored in this downtrend for the better part of the last 6, 7, 8 months, basically since it went public. So we're price-first investors. We're always looking for stuff to challenge the narrative. I think there's a lot of pessimism around the crypto stablecoin world. This is one name acting better very quietly.
Yeah, this might be the better bellwether for stablecoin for sure. Chris, thanks a lot, my friend.
Always a pleasure. Thank you.
Appreciate it.